Hello traders. Today we're going to do something a bit different. I want to start by asking you a question. How well do you know your chart patterns? What story does a chart pattern tells you when you look at the screen? For example, this is the chart. XAU-USD pair. It could be any currency pair. For example, Euro-USD. When you look at this, what can you deduce just from glancing at the chart? What is it you can talk about? If I pause to ask this question, assuming we're live and I ask this question, you could say, okay, here I see a sideways movement. Here I see a trend, an upward trend here. There's something like this, okay? And also for people that are very good with chart patterns, you could also say that, oh, there seems to be a gap here. That's this candle, the tails, the wicks of both candles not connecting, and so on and so forth. Okay, so today what I want to do is to actually before that, we've also often had people, if it must have happened to you as well, every trader have this. You go into a market, for example, you see chart like this, you enter here, you are expecting, maybe from here you are expecting a buy, and then all of a sudden it goes to a sell, and then you would say that, oh, they have manipulated the market. True be it, yes, some brokers could be that bad, evil to actually manipulate the market, but you as a trader, you have some defensive mechanism that you can use. Apart from your technical analysis, fundamental analysis, you need your sentimental analysis. You need to follow the sentiments of what are other traders like me thinking. What time of the day should I look out for those opportunities? Okay, at the early stage of learning forex trading, you are so excited for every single strategy you learn, and you test it and it works. You want to put it to play immediately without having that patience. This is human nature. We are hurried. We are always in a hurry mode, right? You don't have that patience to, like, okay, think before you act. So today what I want to do differently is to pick one or two of all those technical analysis strategies we have learned, and then let's see in reality, how does it make sense? How can I, with all my knowledge, how can I put it to make money? Not just today I win, tomorrow I lose, and I have more losses than gains. Okay, I want to remove fear from trading. I want to go to the market. I want to trust the strategy I went to the market with. If I go with only one tool, I want to trust that tool to give me return for my money. Okay, so this is what I'm going to analyze in the next few minutes. But for new joiners, if you are watching our videos for the first time, kindly hit the subscribe button and like our videos. If you are a regular visitor, also like the video to just encourage us. We know that what we are saying is impacting you. Okay, and then if there are observations, give feedbacks on the comment section, positive, negative, whatever it is. For your information, you would have seen in our disclaimer, this is not a trading advice. It's just knowledge sharing. Okay, this is what have worked for me, and then I want to share with you for you to learn from it. Having said that, let's kick into today's topic. So as I said, I started by asking, what do you understand? Here I will say I have a downward trend. Here I say I have an upward trend. Okay, now we've often heard of Fibonacci retracement tool. Fibonacci retracement tool is a psychological level tool. This is a tool that tells you the psychological level of of a trade. Each time if you put it on, it could be forex trade, it could be options, cryptocurrency, stock market. Put a Fibonacci retracement tool on it. It will tell you what are the levels, what you should expect. As I said, when I join in here, I told you can use it on anything. USD JPY. Let's also look at this. Okay, anywhere you have candle patterns, you can apply this strategy I'm going to combine and tell you about today. Okay, so now let's get started. I can use this, I can use the first one, I can use gold, whatever it is. Try. What I would advise you is, after watching the video, please do it, use another currency pair to also try it on your own, and then you can give us the feedback in the comment section. What were your findings? Okay, now the first thing I want you to do when you open your trading platform is to go to a higher time frame, say weekly time frame. Remember, there is this popular saying that the trend is your friend. So I need to know the trend that the market is currently trading. Okay, so for me to get the trend, I will go to a higher time frame. USD the weekly time frame in recent time, if I look from here, is actually upward. I have an upward trend. Okay, this is step one. Don't forget, because I'm on a live chat, so I won't have time to, I don't want to type, I want to be very practical. Let's go that way. So this is an upward trend. Now, one thing I need you to put at the back of your mind: do not use 2 candles, 3 candles to determine trends. For example, 1, 2, I will say downward trend. No. Out here, I will say, let's say 1, 2, 3. I will say upward trend. No, you see here it's reversed immediately. So what is safe? The more, the better. This is where I'll put it. But don't do your analysis on few candles only. Don't determine your trends on few candles. So having looked at this, if I see here today's date is 9. Okay, for this week, because I'm on the weekly time frame, this week is the week of 09 September 2024. If I look at this place here, this week is 04 January 2021. This is a good range. As I said, the more the better. Now here, for this trend, what usually happen is you can use different tools to determine this one I'm going to talk about. First of all, I put this, I put a straight line to connect this. What has this revealed to me? If I fit this straight line here, I see that each time the market USD tends towards this my line, starting from here, let's say this is the peak here, 4th of January. When it came towards this line, it bounces off multiple times here, then it opened up, came back again, retest it twice, bounces off again, retest it, bounces off again. But something strange has happened here, which is this is 29 July 2024. It got to this point. Instead of bouncing off, it breaks this trend line. When it breaks it, then it goes down and it came back to retest, is back again down. Okay, just take this. First of all, we are in uptrend. First insight for me here, is I have seen that my trend line has been broken. Where is this tool? My trend line has been broken. I want to put a mark there. Okay, I don't have the tool here. I didn't save it. Okay, I want to put a mark there to show what I just observed. 1 second. I need the circle. see that. Okay, good. I want to mark this zone. This is in the weekly time frame. Remember, the question is, how well do you know your charts? I've just used one simple tool now, the trend line, and it's given me this. But remember, what I'm interested in is the Fibonacci retracement. So I started from here. That's the week of 4th of January 2021, and then we have seen that something happened here. By the way, before, okay, yes, I can still mark it. If you know your candlestick well, if I zoom this, you see that you have a doji candle here, up here. That is the week of July 2024, 1st of July 2024. You had a doji candle. Then all of the sudden, because also doji candles are indication that there is possible trend reversal or trend continuation. So it happened here to be a reversal candle now, and then on our fitted trend line, it got to it broke it, retested it, and it continues downward. So now I want to fit a Fibonacci retracement here, connecting this point and this point. Okay, so I go here, I pick my tool. Let me explain it before I put it on the chart. This is 0.0, 23, 38, 50%, 61.8, 78.6, and then 100%. So what I want to do is I want to represent these numbers. I put it at the tip, the tip of this down here, and I move this one to also the tip of this up here. Okay, please pay attention to this. As I said, it's practical. Do it on any other time frame. Okay, the more candles, the better, as best as your screen can accommodate. Now, having done this, now what next? Remember, this is weekly time frame. Okay, let me extend it out so that we can see the levels, the lines from this. Okay, I need to lock this. Yes, locked, so that it will not move. Now, what do you observe here? Remember, we said Fibonacci retracement are psychological levels. Okay, when from 0 it came to the first level here, 23, you see it touches it multiple times, then it breaks it. When it breaks it, it went to the 50. It breaks 38 as well. It went to 50, do a little retracement towards 38, then break 50, retest 50, heads up to 78. Okay, from 78 it came back down to retest the 38 region. Here in this case, again, one of our popular where is it? You have a rectangular, sorry, you have a double bottom here. Okay, you have a double bottom here. Let me use this. If I connect this point and this point, let me put it on a straight line. You have a double touch here, which is a double bottom, and then it flew back to 78. Come down to retest the 61.8 region, go back to 78, then break 78 and goes to the 100. Now, what happened? When it's coming back to 100 to the 78, it did not retest it and go back. It rather breaks it, retest it below, and is now heading towards 618. Something again to pick from here, what I usually use. Observe that when this movement happens, it passes, when it crosses 38, it retested at 50, came back to 38, it went to 78. Then sorry, it went to 61.8, retested 50, 78, break this and retest this region. I would say that you have more touches on the 50 region before it went up and break this zone. Now, what's happening here is, remember I said I'm on a live trade, a live market, that's why you will see this moving. Now, what's happening here is that it has 1, 2, 3, 4, 4 touch points here now. The next place, 1, 2, 3, 4, 5, this zone is the next possible target. Okay, now what I want to show you is not this, because I am not, except if you are a swing trader. If you are a swing trader, you can put on your trade, they put your stop loss there, and then you move on and you close the but for regular traders that are day traders like us, okay, we have to now analyze further. We know that the market, now I'm going to ignore everything that is happening here, and then I know the market is inside here. Usually what I do, so that the market, the chart window will not look too busy, I can reset the visibility of this one to stay within the weekly and above time frame. Okay, so what I'll do is I'll leave it in weekly time frame. What I mean here, what I just did here, that's if you're using trading view. If I go to the daily time frame now, you see what I have done there, that is the Fibonacci is no longer existing, although the other chart, because I didn't change their visibility, is still here. Now go back to the weekly time frame. I want to forget other zones. I want to come to the busy zone here. So now I'm going to put another Fibonacci within this busy zone. Where is it? So within the busy zone, I would assume this, because it's going downward. Okay, so it's in the it's downward here, so I'll assume this to be 0.0. I'll assume this to be 100. Okay, now what do I want to do with this? If I go to the daily time frame, it's not visible. I have to change, I have to make this one, I hope it will not affect the bigger one. I want to set this one visibility to day only, so that you see it has disappeared from here. If I go to the daily time frame, you have it here. Okay, please, if you don't understand anything, pause the video, go back again and study what I said. Okay, now you know how we got here. The weekly time frame that gave us this, there is a zone in the weekly time frame, that the market is currently rallying around between 618 and 78. So I'm not ruling out the possibility that it will come to this point, but because I am a day trader, I want to take action within what is happening right now. So this is how we got this. If you look at this from 0.0 here, it came to 38, it came back to retest 23, it came to 78. Okay, it's within 78 now. Now usually it's possible to retrace back to either 618 or possibly retrace to 0.5, okay, before it continue its movement. And also it's also not ruling out the potential to actually go to 100 before it starts turning back. Okay, good. Now depending on where I want to trade, I'm zooming it out so that we can see it clearly. Depending on where I want to trade, okay, the time frame I want to trade, I need to step this down further. Again, if you understand the Fibonacci retracement very well, what it does, let me do this again. I'm just bringing it down so that, yeah, what it does is that it tell you the psychological levels. This is 100. After 100, there is another level after 100, which is far below this one. Okay, that is the extension. After the completion, the extension. So Now, there are other tools again that you can use here. When you have the first run here, 0 to 23, here is the first run here is 0 to 38. It came back to 23. Then retesting this line, this neckline, and then begin to proceed. So the target is 78. Whatever it's doing now is more like just trying to clear people possibly, but we cannot tell whether it has broke because we have not seen a retest here on the daily time frame. Okay, now remember this is shown only on the daily time frame. I need to do two things. I want to check the 4-hour zone. What happened here within this region? Again, I'm going to put my Fibonacci here, and sorry, let me reverse it. This is 0.0. No, this is 0.0, and then this is my 0.100. Okay, 0.0 and 0.100. So now if I step down, this is carrying the daily, I have to change the settings to carry hours. So I will leave it in the hour time frame. So it's showing 1 hour, is going to show in 4 hours as well. Okay, now it has disappeared from here. I step down again to 4 hours. This is now where we want to do the trading. Again, the same strategy, the same logic that happened in the upper time frame, where we begin to read from 0 to 23, bounce back and so on. It's again the same that applies here. Okay, here now, because it's a different time zone, I have to now look at this, the 4 hours zone now, because I have reached where I need to begin to set up my trades. What is significant here? I have to look at the bigger picture now here within this region. What is significant is that if you check here, there seems to be a zone here, support become resistance. Okay, here initially, when this market came here, it was a resistance. It went back, came back, then it breaks it through before it becomes support turn resistance, because now it becomes a resistance here. I would want to fit that line. I hope you are following. I would want to fit that line, which is this one. Let me use let me use a parallel channel for this. I will explain why the use of parallel channel. Parallel channel would actually give you a zone. It's just like rectangular. It gives you you can have a block of zone where the event is let me see. Okay, good. So let's put I can put some colors. I can fill it so that you would see clearly what that is. Style, where is the fill? Channel, fill the channel with something brighter so that it's visible. Let's see. Okay, it's still not very visible. Let's make it a bit visible. Okay, we can see the channel here now. So what happens is that within this channel, after forming a support before, it now becomes a resistance for this to go up. So this here, we mark this. So from here the journey starts. So I'm adjusting this now to where the journey starts. So it starts, I use the midline here. Now from here it came down to the 78 region. It's very volatile here. It came back here again. It tested this region 1, 2, 3, 4 before it begins to go down. Okay, now it came back to retest the nearest zone. Now it's going down. It has broken this region because it has tested it before. Potentially now my target would be this point 140.160. This is my potential target. 140.160. Now I would stop at the 4 hours window, but this is something that if I go to the 1 hour zone, you see again, it's fitting perfectly into those psychological levels. Let me go back and reduce the length. Okay, now you see this is actually happening to be at an extension, because this is it's an extension. The extended, it has actually within this figure, it has satisfied its work. It stopped at the 100 which is 141.35. This is the safe zone, but because it breaks this, and if you check from here, it's very aggressive. It breaks this, so potentially is coming to the next zone here, which is 1618 here. This is 140.03. okay, now the other thing I would do is, usually I take the length. I can measure this to see this distance. What distance does this give? This gave me 2.996, correct? So what I'll do, I will also check here. From here, what will it give me? If I go to 2.996, it's giving 140.007, which is an indication for me that this journey is somehow a reality, is potentially coming down here. USD JPY potentially coming to 140.36. Now this is called technical analysis. I can go on and on. Within the one hour region, it's still there. It broke here. It's for form of retesting down, so it's still trading. Everything is in the region of what we're thinking. But after your technical analysis comes the fundamental analysis. Fundamental analysis are things without your control. These things you cannot control with technical analysis. Okay, stick to this video. I'm going to tell you something about when to, at the beginning we talked about when you trade, you say somebody manipulated the market, which is reality. But I'm going to show you a strategy, something that would make you not lose your money because of the manipulation of the market. I reserve that for last, but I need to give you clear definition of how to use this tool before we jump into that. Okay, as I said, if I look at this in the 1 hour zone, this market is still going down. So what I can do, you can go as low as now I have to do the one for minutes. So here again, I will repeat what I did earlier. The visibility here stops an hour. If I go to 15 minutes or 45 minutes, it's not there. Okay, so now 4 hours, 1 hour, I can actually take my decision here. So which means my boundaries will be this and this. If I enter this market, which is midway, I would say my stop loss will be above this, my take profit will be within this region. But because it's halfway, it's also a bit risky. Can I cascade this down further? Then I'll put my last Fibonacci and set the setting to be in minutes only. Okay, again from here, sorry, it's not even let me go higher so that I can see it clearly. Good. So here I'm going to put another Fibonacci, making this point 0.0, and then change the visibility to minutes only. This is the last one I'll put. Sorry, visibility, not hours but minutes, from 1 minute to 1 hour. Okay, now if I say okay here, it also disappeared from here. But if I go to the 45 minute, I see it there. I go to 30 minute, is there. I go to 15 minute, is there. I go to 1 minute, is there. Now, so this is where you make your entries. remember, first of all, in the weekly time frame, we said it's trending up before, and then we have a break here, which means potentially is heading towards this region, 139 region. In the daily time frame, it has broken 78. It came to 78, went back to 61, then so it's heading towards the 139 region. In the 4 hours time frame, what do we have? Is also trending down, is red. In the 1 hour time frame, what do we have? Is trending down, retracing a little, but major trend here. You can validate this with your Hanky and she. Look at Hanky and she candlestick. This with it usually Hanky and she candlestick paints the direction. Okay, so now it's red, which means it's also in sell. Let me return to the normal candlestick. Now I'm looking for entry. Again, my entry should align with the market trend, the major trend. I have seen up to 1 hour, the trend is downward. Okay. Now, as I said, you will take your trade from 1 minute, your entry. Let me go to 1 minute now. In 1 minute, what is happening? It's ranging within this region. There's no clear opportunity yet. I can't say from here, the major trend is downward. If I have taken a sell there, you will see that it's going against, you're going to say, oh, they just said it's going downward. No, wait for confirmation. If it breaks this line, if it breaks 14104, okay, zoom it out. What happened here? You see, when it came here, it retests, it breaks it. Fake breakout, fake breakout. Now, each time it comes to retest this, now it has tested this. It came back here, retesting this. Is this safe for me? If there are too much noises here, then I can step a bit up. 3 minutes, a bit clear, not very clear. Go to 5 minutes. I want to see the clear pattern. Okay, good. Now, what is safe for me? If you remember what the first thing I did at the weekly time frame, I fitted a line straight to, remember, the candles are much here. Okay, so if I decide to fit a line here now, so potentially if it didn't break, each time it comes towards this line, it moves down, towards this line, it moves down, towards this line, it moves down. So I would wait here for it to come towards this region before I place my sell. Okay, the same thing here, so now I'm waiting for it to come towards this region a little before I place my sell. There are two possibilities. Either it comes towards it or it breaks here. Okay, if it breaks here, it's a confirmation for me to continue. That is, it closes below this region, then I would continue. So this is what I want to tell you about the Fibonacci itself. Now, the secret for you to enter trades and you are not knocked out easily, or you are not the effect of manipulation will not hit hard on you, is what I'm going to show next. Again, if you have not liked our video or you've not subscribed to our channel, can you please do now? So it encourages us to do more of these type of videos in the future. Now, in the 4 hours zone, I am not after the candle now. I'm not after these stuff you are seeing on the screen. What rather I am after is the volumes. How do you know what? You see these bars here. When these bars indicates how many the volume of traders that were in the market at that particular period. Usually where manipulations happen is where you have less volumes. You have the number of traders in the market is low. Then people, the brokers can actually play around with their platform, and then you lose your hard-earned money. So in this case now, what happened is in the 4 hours zone. Okay, in the 4 hours zone, look at that interval where you are having spikes. The intervals you are having spikes is the okay, because I have too many information here. Again, I'll come back to this towards the end. The analysis it holds for any currency pair, euro, USD. I need something that is a bit clean. Okay, good. Why did this show here? Okay. I'm surprised that this is showing here. Okay, let me take the, yeah, but it's clearer for me what I want to show. What I want to show you is clear here now. You see, there are intervals where you have spike. And if you know a little about forecasting, you would see that these spikes are happening at a fixed interval. Okay, let me say here, let me put a line there so that it's easy for us to see clearly. If I put a line here, the period, there are few instances that the bars are either touching the line or they are breaking the line. Now, what I need to check is what is the, because it seems if you measure from here to here, it seems to be the same distance to here to here. And so what I now need to check is to check the timing. Remember, I'm in 4 hours zone, 4 hours time frame. Here, depending on where you are viewing from, I have 1600 here. This is 20th August. 21 August, 1600. 22 August, 1600. 23 August 1600, 26 August 1600. What's this? 6 September 1600. What's this? 12 September 1600. So something is ringing bell for me. 1600. So 1600 of every blessed day in my own current location is giving me, I'm UTC plus 3, you can see from screen here. So at 1600, it means that is 1 GMT, 1 GMT or 1 UTC, Universal Time. I am having volumes, meaning more traders are coming into the market, okay? Where this timing coincides with, or is closer to a news event, you will see that it also pulls more weight on the volume, okay, and impact on the candlesticks. So now let's check again. Going back here, what happened? You see, there are, where is it? Let me take this. Please make sure you come back to the chat. Search for this video, come back to the chat session and tell us your experience after using this strategy. Don't watch the video once, watch it over and over again. If you get to a point you don't understand, please go back to that video and check listing again. And if you have question, put it there. I would actually go through the comments and I will get back to you. If possible, you drop your email address, okay? I would get back to you. Now, I am highlighting some stuff to talk about. Where you have the spikes, look at what happened here. Let me take 2 more. There is spike here. There is spike here. But I want to explain something to you. How to combine everything we've talked about now to actually taking advantage of this. I think this was okay, not this one. This where is the recent one? 11. This should be where the CPI happened, something like this. Where is it? Okay, so now how do I combine these things with my, okay, first of all, what I notice here is that at 1600 every blessed day there is volume in the market. Now, because the big players, banks, big people that have big funds are coming into the market within this period, it is hard for my broker to, because I put a stop loss here to decide, to come for me. They will rather want to go to catch the big players. So that is why it's safe. If my my technical analysis had shown me the direction where it's going to go, then I'll play along with it. Okay, that is when I trade. It is not, you must also have experienced it. I've been trading for since 2008. I've been doing forex trading. Then it was Alpari UK that I was using. I constantly lost money. You would imagine a new trader, because I have done a small demo and I saw, oh, if you move this way you make profit, if you go this way, then I jumped blindly into the market. I begin to lose money. It took a while before I begin to not only depend on what people say, I begin to study deeply the psychology, the trading psychology itself, okay, which is part of which I shared to you today. Today I happily make money. When I have the time I want to trade, I go into the chart, I look at the chart, quickly fix those, what all those Fibonacci analysis of the psychological levels. I can place them on my head, not necessarily drawing them on the chart. Then I know what to do. But the key to the success, you can do everything perfectly well there. If you enter the wrong time, then the brokers will just use you, and you lost your money. But when you enter, you do all your analysis and it's fitting to this window when this is happening, then you are sure that you would actually make the profit. So going back to, I think it was euro, no, JPY. Okay, I think it's USD JPY, correct? Yeah, this is the one we're using before. Okay, good. Now, coming back here with everything we have said in mind, you see 4 hours here, this region, 4 hours here, see this big move, 4 hours here, see this big move. What will I do for today? Rather, this is the time now here at this level is currently 8. So which means I still have like no, this candle form 8 is going to close 12, and the current time now is 9. So I still have like 7.5 hours thereabout for me to catch whatever big move is going to happen within this region. Okay, within this region, whatever big move is going to happen, I still have that time. So now what will be happening now is that potentially it can be, this can come up, come down, come up, come down. Yeah, and again, because it's midway here, 50-50, I will not take this risk. Even on the lower time frame, is also, you see it begin to perambulate here. It goes up, it might come down, up. I won't waste my time. I will wait for, even though there are spikes of volumes here as well. Like if you look at this in the 15-minute time frame, this is 15:30, 11:45. So this is not consistent. 4:00 you don't have. But what is certain is that by 4 p.m. what I can do, I will advise you to do is, you can come here and mark, this is 12:16. You can place something there. Where is that? You can place a 2. Okay, I will use this now. This is 8, 12, 16. So here I'm placing a marker here that would tell me that this is the point I need to enter the trade. At this point, I need to enter the trade. So now I will wait. I go to 1 hour. There is still distance. Okay, I can take this out now. Whatever it is, it can continue to form whatever pattern, but within this region. And now, what time is this news? Which news is this? This news is 5 p.m. Okay, Michigan consumer sentiment. This could have impact on what is going to happen then. So this market can continue to move within this zone until that time. If I go to the lower time frame, it's still far, So here, this can decide to break this, come down. This is noisy. Usually it can go up. Then because of that, I will just stay out of the market. You see, it's going up. It might be coming to test this region again, and then who knows, the next zone after this is here, so it might be coming up here to test this zone. Okay, so for this, I would just, except if what you could do is, if you want to trade this, you know you are going to have a bigger stop loss. Okay, you have to have a bigger stop loss. What I would do is, let me look at this. If I come here, what I have said is that it beats here, it's coming here. So let's put something here. We will find time to, we will check this market, how it played out. Okay, I want to do a forecast here. In this case, I said I'm in for a short. What I want to do, for example, if I'm taking this trade here at this moment, let me go down. Yes, if I'm taking this trade here, for example, this is 4 hours here. My stop loss will be above this region, and then my take profit would be, I can't see it, adjust it. So if I'm taking this trade here, my take profit will be on this blue line. It's not allowing me to, okay, this is my take profit. My stop loss will be here, above, just slightly above this line. Now this is 3 to 1 to ratio 3.6. so I would check, because as I said, there will be volume within this time frame, or I can either enter that if the market is still within this zone here. So what I will do is, then I would enter the market, set my take profit here and this, except this might also, depending on the entry, if I look at the lower time frame for the entry, if the region it's trading in is potentially pointing that is going to come here, okay, if it's the closer to this place, the better for me. If it's closer to this place, I'll just do my entry. I can adjust, my entry will be wherever it's close to, and I'll have less impact, and I'll take more from the trade. So just to recap what we talked about, first of all, I talked about identifying trends on the chart, where we started from the weekly time frame. We identified this is an upward trend. For USD/JPY, it has broken this trend and then is heading towards this 139.2 region. Okay, with this in mind, we went to the daily time frame, we checked. The same thing is also supported in the daily time frame. We see that the daily time frame is also downward, is breaking this zone 1.41 after retesting 0.618. So we said it's heading to 139.2. This is still strong. Then we go to the 4 hours time frame. In the 4 hours time frame, it has broken the 100 region, is possibly coming to retest it, but we see it going towards the 1.40 in the 4 hours time frame, which means if I link this to the previous one from the daily time frame, it might not hit the the projection we have from the daily time frame, except if this news here, any of them impacts it. It might not hit the 1.39.2 today. Okay, so this is how I cascade it down to the 1 minute time frame. Put this on, it doesn't cost you anything to put this fib tool on your chart. Put them on your chart, leave them permanently on. If the color is disturbing, you can reduce the exposure of this color. You can make it fainter. You can even remove the colors and just have the lines only, but they are very, very important, because the trades respect these zones, they respect these psychological zones. Okay, so this is it. If you have not liked the video, please hit the like button. If you've not subscribed, subscribe to this channel, and then see you in our next video. Thank you. Peace out.